Hi, I'm Hewison here. Welcome to the update for MarketClub, and this is the Monday, the 16th of May. It's 1 p.m., a little after 1 p.m. I started this early. I just got back from vacation, a little bit jet lagged, but I had a great time. It's great to be back in the markets. Boy, what markets we've seen here. Tremendous changes. Let's go back straight to our portfolio, which I've set up today, and you can see it's our portfolio, a 1 p.m. update right here. And let's look at the S&P 500 cash market. And this is the index. And it's a plus 55. Automatically, that tells you it's a trading range. So let's just look at the chart. And you can see our trade triangles are already in place. We have a daily down, which is not so important. But the weekly and monthly is still positive. So we would have to mark this market as a longer-term bullish market. And so we're looking at this market to go higher. And so the trend is up. And we are bullish still based on our trade triangles, which are positive here and here, that this market is going to go higher. We also have a 1400 target zone on this market, 14,000 or 1400 rather, on this market. So we're looking for this market to have another big push up, and we expect it to hit this level here. We'll see what happens, but generally speaking, pay attention to the trade triangles. They've been very, very accurate. And I can just put the weeklies in here. You can see our last one was right around here at 1339. The market's trading currently at 1337. So you can get in right around the levels we were suggesting in our last weekly trade triangle. So let's go back. Let's clear the screen again. Let's go back to our portfolio and look at our next market, which is going to be silver. Now this is amazing because it's a minus 70 right now. When I left for vacation, it was a plus 100. And we are talking for this market to get to the 50 level. And quite frankly, I think it achieved that in terms of we got to 49.68, which is right here. And I think we've had a nice move on the upside. So we were talking for the market to get here. It pretty much realized that, especially when it came back down and went through this level here. We would call this like a little mini double top and a pivot point. Going through this level was really the spell doom for this market. I didn't expect it, I don't think anybody did, to crash $100. I think that's a big, big move on the downside. However, a lot of this was the unwinding of the gold-silver spread. We've been advocating being long silver, short gold for quite some time. Obviously, that changed when we had our signal to come out, and I'll just show you what that is. So clear, off, and I'm going to go to our trade trials, our daily trade trials. You can see right here at 45.46 on the 25th of April, that's when we had our first signal to get out of this market. And as you can see, we're trading at 34.15. Very good timing. Again, the trade triangles are unemotional, they're technically strong, and you want to be paying attention to them. Right now, we have our longer-term trade triangle right here. The monthly trade triangle is still positive. This is for long-term traders only at 1874. Again, the market's at 34.15. Our weekly is out. Our daily is out. So you should be basically either short this market or out of the market entirely. So let's go back to our portfolio. And let's look at our next market, which is the gold spot. Again, we were looking for this market to hit 1500. We actually got there, and we actually got quite a bit higher than that, more than we expected. But some of that was to do with the unwinding of the cross, basically people buying their short gold positions and selling their silver positions. So again, this market continues to be longer-term positive. However, we've got support coming in at 1462.50, which is right around these levels here. And we have resistance coming in at this level right here, which is around the 1526 level. So let's see how this works out. But again, we've got a little bit of a divergence. I would probably want to stand aside in this market for the time being and wait until we see something, either a resumption of the uptrend or we see a full-blown negative market. So pay attention to the trade triangles. They're right now you should be neutral. Longer-term traders should remain positive on gold. So let's go back to our portfolio, and let's clear this off the screen. Oh. And we're going back, and we're going to be looking at crude oil. Crude oil was, well, to say the very least, very dramatic. When I left, it was almost, I think it was a plus 90. We got out of this market, as you can see with the trade triangle, 111 $111.69, which is an excellent area to get out of, considering we traded down to 96. So you can see the kind of move, 111 to 96, almost $15, almost $15,000 a contract. Again, we assumed that 97.42 is a downward position. I think that still remains intact. However, we're getting somewhat of a bullish divergence on the weekly, on the daily Williams percent R indicator. So let's watch this market very carefully. We'll have an update tomorrow on that and see how it works out. But it looks like if we close down here, it could be a new low close, but we'll see how it closes. Let's close everything down. We're going to go to the dollar index now. And the dollar index, if you remember, we were pretty negative on this market before we left. It hit our target zones, and it's had a nice rally. Now, a couple of things have happened here. One is you should be neutral in this market. The trend, the longer-term trend in the dollar index remains negative. We are monthly trade triangle, negative. Weekly is positive, and the daily is positive. So you should really be out of this market for the time being. Today's pullback obviously is an important one. I think we may be rounding up to go still further. It's a question of what's worse, the euro or the dollar. They're both bad. The bottom line is they're both bad. And this sex scandal case that's going on right now with the IMF could be very interesting to this market. So let's see how that works out. But again, the longer term trend in this market is negative, with resistance coming in at 77.50 on the dollar index. So that's the level you want to be looking at. So again, let's go back. Let's clear the screen. And let's go back to our portfolio. And let's take a look at the Thomson Reuters Jefferies CRB index. We talked about this before. Now this was very positive when I left. And as you can see, it's really reversed itself. It's a minus 70. And we're going to look at see how this market plays out. But again, this does not look like a great sign. We've got all of our trade triangles are negative. A couple of minor ones are positive. It's a minus 70. You can go on our audio, talking charts, and it's going to tell you what's going on in this market. Minus 70 chart analysis score indicates that this market is in the confines of a longer-term downtrend. Although the odds are in favor that the trend will continue down, be sure to use money management stops to protect capital in case we see further strength come into this market. Okay, there you have it. So basically what we're looking at with the CRB index is this. It seems to be somewhat rolling over. And let me just write this so I get this right. So it looks to me like it's sort of rolling over a little bit. And certainly closing below this line is not good. And let me just show you how that you can change from a candlestick chart, which I really, really like, to just a simple line chart, which is very powerful. So let me just go back here and take this off the screen, clear it up, and simply go here, line graph, and boom. You see how easy this is? So again, this would be a very important level. If we close, I would say around 335, which is almost 3 points lower than we are right now, that I would consider to be a really negative sign in this market. We have a little bit of a divergence, so I think we may see a bounce, but support is at 333.50 and major resistance at 348.50. So let's see how this works out. Anyway, this is Adam Hewison. It's good to be back. I'll be here tomorrow, 1 p.m. Tune in, listen and see what the markets are doing. Till then, have a great trading day.